Good morning, everybody, and welcome. And thank you for joining us today for this webinar on digital financial resilience. We are thrilled to have you and have such a curious audience here. And whether you're a seasoned expert or just starting your journey in this digital financial space, we are confident that you'll gain valuable insights today, and we'll hope that you'll also implement them in your places of work. So today I am joined by two distinguished gentlemen and a lady, yours truly, that will take you through this webinar. So we will be exploring three thematic areas. Wamaitha Mwangi will be talking about data protection knowledge, where she will make you understand how to safeguard your personal information online, the regulations involved, best practices, and also how it couples up with digital financial resilience. We also have a distinguished gentleman known as David Osawa, who is a thought leader in the fintech payments and digital banking space. And with over 15 years of experience and knowledge, he has a proven record of developing business processes, tech strategies, and profit initiatives in the digital banking space. So David will be taking us through safeguarding your online bank accounts, what security measures should be employed, the security protocols needed, and how to avoid potential scams. Welcome, David. Last but not least, we also have with us Albertini Francis, a young man who is a passionate advocate for cloud security, and he firmly believes DevSecOps is the key to unlocking a future where security is integrated into every stage of a development lifecycle. He is also an AWS community leader, certified in GCP, Azure, and Palo Alto, and also the Cybersecurity cloud security trainer. Karibu sana, Albertini. He'll be speaking to us on the API security landscape, vulnerabilities within the APIs, and how to have a more secure online experience. We will have also a Q&A question and poll questions for every thematic area. We kindly urge you to engage with us for this webinar. And if you have any questions or clarifications needed, you can raise your hand virtually or post your question in the chat box. So, karibuni sana to this webinar. So what is data protection and how does it, or data privacy, and how does it integrate with digital financial resilience? We should understand that Kenya enacted a Data Protection Act in 2019 that governs how we handle information for our clients, for our consumers, and institutions alike. And so data protection does not come here to stifle any innovation, but rather it's a new frontier that comes to give birth or encourage innovation. So data protection, with all the principles that are involved, with all the rights of data subjects and obligations of data controllers, the digital financial space has a very huge mandate to make sure that they are compliant and are implementing these laws within their institutions. So what is exactly digital financial resilience and how does it integrate with data protection? So the digital financial resilience, it's the ability to do the following. You are able to withstand cyber attacks from your organizations through measures like employing firewalls, encryption, and training employees, such as an awareness session that we have right now. We'll also With that, we are able to bounce back from disruption. That means we have our business continuity plans in place and also backup plans, or we are also able to log and monitor just to make sure that whatever made us go down operation-wise does not happen again, and give recommendations for the same. So even for the financial resilience and data protection, we are able to respond effectively to incidents. Do we have a clear plan for identifying these threats, how to contain them, and how to recover from these data breaches that will minimize any damage or any slowdown to our operations? And also, we should consider that third parties or vendors are a huge contributor to risks in our institutions. So we should be very careful or have a clear strategy on how to vet whoever we are onboarding in our institutions, and make sure that the security practices that they do have are at par with what your organization needs. So with all this, you're able to actually implement or handle digital financial resilience. Ken? Yes, and just to add strength to that, to all the digital financial resilience, these are some of the practices that you can employ in your organization. You have to comply with any regulation or any law, for example, the Kenya Data Protection Act, GDPR if your data is handled outside Kenya, or even CCPA if it is handled there. Make sure that you are able to understand and employ the principles, for example, lawfulness, transparency, portability, and the likes, just to make sure that you comply with them and to avoid hefty fines. Understand the rights of all your clients, of all your consumers, and also understand the obligations that you do have as either data controllers or data processors within your organization. By so doing, we go to the second point, which is going to build trust, customer trust, because if they see that you're responsible of handling their information, they'll feel secure to give you even their financial information. I would imagine a scenario where a customer gives you their information, but later on they are texted by a person using the same information they were given. A case in point, the money lending apps in Kenya that were notorious of sending threatening text to their consumers or even the contacts of their consumers, and it was not the mandated purpose. So there, with such examples, clients lose trust in you, and your reputation goes down even amongst your peers, thereby even making you lose business. So once you comply with the regulations and customers trust you even more, there's a reduced risk because you've employed all these data protection measures. For example, you have integrated privacy by design, you have integrated data safeguards, for example, encryption policies such as access control and password, thereby protecting both your financial reputation, well-being. Ken? Yes, so here is how they work as a united front, because they are not siloed environments. Resilience and data privacy are not separate, but rather two sides of the same coin. They have to be integrated to work best together. So if we employ data privacy security measures such as the ones you're seeing here, you're able to strengthen your overall cybersecurity posture. Because for example, if you employ access control, there's actually an auditable trail of who has access to which information within your institution, thereby minimizing the risk of data breaches. If you have well-crafted and authorized business continuity plans, in case of an outage of either natural occurrence or human occurrence, data security is secure by having recovery efforts and ensuring information is still available even during downtime. And also, if you have incident response, a very good incident response plan and team, that requires swift action to contain data breaches, you're able to minimize any damage that comes with the breaches, and thereby demonstrating to your clients and consumers that you are resilient in your operations. Also have a well-crafted third-party risk management that will protect your institution. We have seen in cases that where you onboard a third party, most customers or most organizations just trust whatever the other third party says, but it's good to have due diligence or do due diligence on your part to make sure that the security practices they have in their organization is better or at par with your organization. This is to limit any form of liability within you, and also customers know that they have given you information and it is secure no matter where it is. Ken? Yes, so these are some of the actionable steps for your institutions that you can employ within your organization. Ensure that you have a data privacy policy, otherwise even known as a data protection policy. This is a mandatory policy by the Office of the Data Protection Commission. Make sure that it entails how you collect data, how you process data, how you use it, share it, archive, and also delete it. That is all the basics of a data privacy policy. Train all your staff on data security practices. Do not assume that they know what they're supposed to do. Ensure that they are educated regularly through such training sessions on security-based practices. It is also important to do regular security assessment and even vulnerability assessments, just to make sure that the gaps found in your organizations are filled with recommendable actions. It's also important to invest in robust cybersecurity solutions. This is because we see cybersecurity always growing. It's always a maze. What was working yesterday may not be important today. So stay ahead and know what is needed within your organization. Create policies such as the incident response plan, such as the business continuity plan, just to make sure that your data security is a core principle and is strategically aligned to the organizational business goals. And then partner with technology vendors who have a proven commitment to data security. This will ensure that you have done your due diligence, especially on third-party management program, just to make sure that you have built a secure future. And we have a poll. We have a poll in the poll area where we are going to ask for the first question. In your opinion, and you can answer either through the chat or raise your hand. In your opinion, which of the following is the most important step financial institutions can take to protect your data privacy? So you can submit your answer within the chat and then we can discuss. So there are strong encryption policies, data usage policies, clear out opt-out options for data sharing, or all of the above. What do you think, guys? I can give you 1 minute to answer that question. Okay, thank you. You can see some of your responses. Many are geared to all the above. None has chosen clear out, opt-out, and transparent usage policies. A few have done the strong encryption practices. So the correct answer, or the correct opinion, if I may say so, it's all of the above. It's important to have strong encryption practices, employ data usage policies, and also have, besides just having opting out options for data sharing, also have opt-in options. So all of the above are correct responses for that question. We have our last question, which is, you receive a suspicious email that appears to be from your bank. What is the first thing you would do? So click on the link in the email, call your bank directly using a trusted phone number, forward the email to your bank's security department, or report the email as spam. So what do you think, gentlemen and ladies? What should you do in such a case? It is the first thing, it means first, what would you first do? You can do all, but what is the first thing you would do? Yes, I can see some of the responses. Overwhelmingly have chosen forward the email to your bank's security department. A number of you report the email as spam, and a few call your bank directly using a trusted phone number. And it's good to know that none of you has chosen to click on the link in the email. So the first thing you should do is forward the email to your bank security department and report it as spam, and then call them later just to make sure they've gotten it and how to handle that breach. Thank you for listening to the Data Privacy and Digital Resilience, Financial Resilience Integration. I do hope that we are going to engage more in the chat and raise your hands virtually. I now welcome Mr. David Osawa to take you through online banking. Karibu, David.
Thank you, Maida, for such a well-articulated presentation. I hope I will be as eloquent as you were. From the polls and the poll answers that you just gave, I believe I'll be preaching to the choir. But notwithstanding, let's just dive into it. Before we go into safeguarding online banking and the measures that have been put in place by banks to do that, I'd like us to first of all talk about the technology that is transforming financial services, so that we know these technologies and how to safeguard them and the known threats that are, again, attacking these technologies. So we know that these technologies are revolutionizing financial industries, making it more accessible to people who would have never had access, or even convenient for times when you do not have access to brick and mortar, at the convenience of your phone and your home, your laptop. What are these technologies we're talking about? The ones that you use on a day-to-day. We have digital and mobile finance. I've grouped them in such a way that it will make us easy to just go through. We have online banking, what most of us call internet banking and mobile banking. These are digital platforms and mobile apps that offer convenient access to banking services, allowing users to open accounts, transfer money, pay bills, and basically just manage their finances from their smartphones and laptops, etc. This is especially beneficial for those without access to traditional banks and basically just brick and mortar facilities. Then we have neobanks. Neobanks are digital-only banks. We've seen a rise of this in the last possibly 5 or so years. Okay, digital-only banks operate without any physical branches. They reduce the cost of operations, enabling them to offer lower fees and higher interest rates. So it makes banking more affordable and accessible. Some of those neobanks that we're talking about are, for the context, in Kenya, we have Branch, we have guys like Quora, NCBA Loop. Over the world, we have, like in UK, we have Revolut, we have Chime in the US, and we have these banks with over 1 million plus accounts opened. And so they're becoming more and more famous and easy to use. within fintech innovations, of course, we have fintech as a whole is just an entire innovation on its own. But we're talking about the new innovations that are coming up within the world. We have things like peer-to-peer lending. Peer-to-peer lending is when just one user, just the same way you'd lend someone money on a normal day, we have apps that now support that lending. So we have platforms like Lending Club. If when you get time, you can just Google it up. And we have others like Prosper. They're yet to be famous in Africa, but they're coming up, that connect borrowers directly with lenders, offering lower interest rates and democratizing access to credit. And this is particularly for those who may not qualify for traditional loans. And then we have things like robo-advisors and chatbots. Robo-advisors use machine learning and AI to automate things like investment platforms and provide personalized financial advice and portfolio management at a fraction of the cost that human advisors would do. Chatbots also just use AI to basically go through a library of information that they have to address user concerns or user issues that have been raised. These are also just fintech innovations that are coming up. The list is endless. In the interest of time, I just picked a few. Then we have blockchain and cryptocurrency. Under blockchain, we have decentralized finance, DeFi. Blockchain technology enables creation of decentralized financial systems that operate without traditional banks. Okay, so DeFi platforms offer services like lending, borrowing, and trading with lower and greater accessibility, benefiting regions with underdeveloped financial systems. So places in Africa that are really suffering with underdevelopment can really leverage on DeFi to grow their financial access. And then, of course, we have cryptocurrency. Cryptocurrency has been in play for quite a long time, controversially as it may, with different opinions across board. But these digital currencies, like, are an alternative to traditional banking. So they enable individuals to store and transfer value without needing a bank account. This is particularly valuable in regions with unstable currencies or limited banking infrastructure. However, as much as it was designed to basically replace traditional money and banking as we know it, cryptocurrency has been used and is still being used as a trading platform and as a means of exchange of goods and services. You have places where things are being bought using Bitcoin, or Bitcoins are being sold and bought again as Forex. Okay, not necessarily as Forex, but as a trading chip. Okay, and this is common all through the world, even with places where banking has been revolutionized, and it's especially quite popular with the young generation. Okay, so moving on to the next slide, Ken. Still on the same topic, we have mobile payment solutions. Mobile payment solutions, you know them, or we have payment service providers that are licensed across different central banks in different countries. In Kenya, we have guys like Pesapal, we have Celluland's, what is it called? Is it Ting? We have M-Pesa, and mobile payments are widely adopted in emerging markets, providing financial services to the unbanked and the underbanked populations. So M-Pesa, as we all know it, has revolutionized the way mobile money works across the world and has been adopted mostly with the underbanked. We have, before the advent of M-Pesa and mobile money, we had a banked population over 18 of about 17%, okay, 17, 18% thereabout. meaning another 70+%, basically 80+%, was unbanked. Now, when mobile money came in, they found it as an alternative to actually have banking facilities through mobile money, and they're able to pay up for services and also now access credit. With this, there's also cross-border payments. Fintech companies like Revolut, for instance, offer lower cost, efficient international money transfers, reducing the reliance on traditional expensive remittance services. So still, we have guys like M-Pesa playing in this field. Initially, we had people like MoneyGram, Western Union, and the rates are exorbitant. Now, with the coming in of other fintech companies, say for instance, TransferWise, it makes it quite easy, accessible, and reliable at a very reduced cost to transfer money across borders. Okay, then we have inclusive credit scoring. In our field, we use credit rating and credit scoring engines that have employed the use of alternative data, not just transactional data that you get into the bank, not rule-based, but now a hybrid of both rule-based and alternative data, such as utility and rent payments, and how you use your phone, your whereabouts, etc., to assess the creditworthiness, extending credit to larger populations. So if you might be as old as I am, when we were growing up in our younger days, the only time you could access credit is if you had a balance in a bank account and had transacted within that bank account for a number of months or years, with a minimum balance, an average minimum balance of X amount. Now, with coming in of credit scoring engines that can use other data, like employing the thinking of, say, for instance, Mama Mboga. When you go to Mama Mboga and tell them you need Sukuma Wiki on credit, that is basically credit scoring. But now, how do you automate that knowledge and use the data that is all over, social data that is all over your surrounding, to judge whether someone is a credit-worthy or not? So inclusive credit scoring explores other alternative data sources and not just transactional data and rule-based data to score individuals. Within it, of course, there's micro-lending. You've seen micro-lending everywhere. I mean, from Branch, Tala, all these guys that are coming in. M-Pesa also does a micro-lending. They provide microloans to individuals and entrepreneurs in developing countries, especially in Africa, after using the alternative credit scoring data that they have. Okay. Still, the same technology that we have provides financial and education empowerment. We have educational apps and platforms. This technology makes financial education more accessible through apps and online platforms that teach budgeting, savings, investing, and financial planning. We have companies like the Khan Academy offering offer courses to improve financial literacy, etc. There's gamification apps. They use gamifications to encourage savings, investing. I don't know if any one of you has ever done this, where you buy a demo app to see how you can actually invest in, say, NEC. Okay, try to buy shares in one company, sell in another, and try to see how your investment portfolio will grow before you can actually now employ yourself to doing that in the real world. Okay, so this gamification apps also just help for financial literacy and going on. Then, of course, we have regulatory technology, okay? Compliance and automation. So for banks and financial institutions to automate the compliance process, they have connected to a number of integrations and regulators that provide these processes at a reduced cost and complexity to adhere to the regulations in place. So this lowers the barriers to entry of smaller financial institutions and fintech startups, enabling them to compete with larger entities. So what are we talking about? We're talking about things like connecting to guys like name screening AML solutions, for instance. Right now, it's just a matter of having an API connected to your core banking system, for instance. Okay, so within it also, now we have the AML solutions that are offered with advanced algorithms and machine learning models that help detect and prevent fraudulent activities more effectively. So that ensures the financial systems remain secure and trustworthy. Okay. Next slide, please. So how do we safeguard the online banking, those applications that we've talked about? Before we do that, we need to know the security threats that are there, okay? What are those security threats that are always there? We have phishing attacks, okay? They involve fraudulent emails, messages, or websites that mimic legitimate banks to steal sensitive information such as login credentials, for instance, credit card numbers, or personal identification details. So one of the polls had asked if you receive an email from a bank with a particular link, would you click on it? And of course, all of you never said if you'd click on it. These are the phishing attacks that we're talking about. They're, I'd not call them hackers, but I'd say spammers out there that replicate, for instance, a website that mimics your banking, online banking website and send it through for you to enter your credit card details, and they capture these details with your CVV and all the securities against your credit card details and use it for fraudulent activities. Others actually packet sniff emails that contain invoices being sent, okay? When you send an invoice to a particular company with your bank details, they packet sniff and intercept these emails and send another invoice with the details just for fraudulent activities. So users may unknowingly provide their information to cyber criminals, leading to unauthorized access to their accounts and, of course, their funds. We have malware. Malwares, including viruses, Trojan horses, spyware, are malicious. Is basically a malicious software designed to infiltrate and damage computer systems. Banking malware specifically targets online banking credentials just to capture those online banking credentials. So what do malwares do? They can capture keystrokes, okay, the keyloggers, take screenshots, or redirect users to fake website, compromising the security of online banking transactions. Then we have man-in-the-middle attacks, what we call MITM. Man-in-the-middle attacks, usually cyber criminals, like I said, intercept communication between a user and a bank server. So basically packet sniffing, and the attacker can eavesdrop and modify to steal information being transmitted. So sensitive information such as login details and transaction data can be intercepted and used for fraudulent purposes. Credential stuffing, which is basically using stolen username and password combinations obtained from data breaches to gain unauthorized access to user accounts. We've seen these breaches so many times happening, where usernames and passwords are gotten from, say, for instance, SQL injection. That is actually another topic. The impact, if users reuse passwords across multiple sites, attackers can easily access their online banking accounts using previously leaked credentials. SQL injection are attacks that exploit the vulnerabilities of a bank's web application by inserting malicious SQL code into the query fields. So what does this do? It allows attackers to manipulate the database in whatever way they want. So basically, attackers can retrieve sensitive data and alter account balances, etc. Then there is denial of service, which is basically, there was this Sudanese anonymous attack in Kenya that was a denial of service attack. So what it does is it overwhelms a bank's online service with flood of traffic, rendering the services unavailable to the legitimate users. So anytime you go online, you can't access the services. So this disrupts the services, can prevent users from accessing their accounts and conduct transactions, of course, leading to financial losses to both the users and the bank. Session hijacking, when an attacker steals user information, user session to ID to gain unauthorized, basically just also in relation to packet sniffing, this is a relative. Ransomware, one of the major ones, is a type of malware that just basically comes in and encrypts your user data. And then they demand for payment for them to give you a decryption key. I don't know if any one of you have been a victim of a ransomware once. I don't know if any one of you has ever been. Insider threats involves employees or contractors of banks and financial institutions trying to steal information or commit fraud. Insiders therefore can bypass external security measures, making it challenging to detect and prevent such threats. Then we have, of course, the most common one, social engineering. Social engineering attacks, the social engineer manipulates an individual into divulging confidential information, okay? The things, social engineering can also include shoulder snooping, where someone is just behind you looking at things and trying to get information of how to actually get into your accounts. Tactics include phone scams, SMS scams, SMSing, and impersonation. So what users may unwittingly reveal login credentials or other sensitive information to attackers posing as legitimate representatives of financial institutions. So you've heard of SIM swap, where, of course, you get a call from someone somewhere pretending to be a Safaricom employee and getting information about you, and the next minute you're unable to do anything on your SIM card, and you've lost monies in your mobile money account. Moving on to the next slide. So what are the mitigation strategies? What have financial institutions done to mitigate all these threats? One of them is to implement multi-factor authentication. So it's just adding an extra layer of security to prevent unauthorized access. There's regular updates and patch to the systems every time technology changes. And the reason why there's always regular update and patching all the systems, you can never make a system foolproof. So always you have to be always on top, making sure that the system is up to date with technological changes and new threats that are coming in. Then, of course, there's employee training and awareness. There's advanced threat detection using machine learning, for instance, and AI to detect unusual patterns and potential threats in real time. Then secure software development, and this is very key in terms of how do you actually include security during software development, the software development lifecycle, and not just testing the sunny side of everything. So you follow secure coding practices and conduct regular security audit of applications, okay? What is it for users? Definitely you're encouraged to use strong and unique passwords. Be cautious of suspicious emails and links. We've talked about this. Enable account alerts. Anytime a transaction happens in your account, receive an SMS, receive an email, so that you can verify whether it's actually you who did the transaction or authorized the transaction to be done. Regularly monitoring accounts, you check balances, etc. Use updated security software on your laptop and your mobile device. Next slide, please. So as we continue, the financial institutions, what have they done specifically, if you can just do a little bit of a deep dive? The security measures employed, like the MFA, how does it work, for instance? It typically involves something the user knows, a password, for instance, and something the user has. There's a know and the has, what you possess. A mobile device, a hardware token, etc. And then something the user is, biometric verification. Okay, so you can put your password, then you receive a one-time PIN in your mobile device, something you have, or you also on top of it, you put in your biometric verification, like a fingerprint and facial recognition. Okay, that is basically what MFA is. Okay, the encryptions that financial institutions have employed, we started from very far. Now we are at triple days, okay, and more. There's hashing, so many things that are around encryption. Encryption converts data into coded format that is unreadable without a decryption key. It uses, so on online banking, things like using secure socket layer and transport layer security, TLS and SSL, to encrypt data transmitted between users and the bank server. So this one prevents man-in-the-middle attacks and packet sniffing, because that data is encrypted and they cannot basically read it without the decryption key. So it protects sensitive information from being intercepted by hackers. So SSL, the presence of HTTPS and a padlock symbol in the browser. Okay, when you see a browser with a padlock symbol, basically, and HTTPS, that means that URL that you're browsing has a certificate. A certificate means that whatever data that you're exchanging between the server and your computer is encrypted, and no one can actually come in between and get whatever you're doing. So these certificates are purchased. There are certificate firms that are actually selling this, and they expire after a period of time, so that you renew the certificate to also just continue making sure that the system is up to date. So it ensures data passed between the web server and the browser remain private and integral. Okay, so we have also fraud detection systems in financial institutions. These systems monitor transactions for unusual activities. They use machine learning algorithms, real-time analytics to detect anomalies, such as unusual spending patterns, access from unfamiliar locations, and they allow for early detection and prevention from fraudulent activities. And then we have behavioral biometrics. What is this? It's a security technology that analyzes the unique patterns of users' behavior. It monitors factors such as typing speed, mouse movement, and device orientation. So it provides an additional layer of authentication by recognizing atypical user behavior and flagging anomalies. So if you've always been having a particular behavioral patterns, and then for a particular point, there's an outlier, this biometrics will actually call it out and ask you, are you sure it's you who's actually trying to do this? Secure mobile banking apps. So we design mobile apps with advanced security features. Therefore, within our development strategy, we always ensure that we incorporate security as part of the measures during the app development, software development lifecycle. So we include features such as app-specific password, automatic logout, built-in malware detection, etc. Okay. Next slide, please. So again, other than just having technology stand up on its own, we also need to empower users. Okay. So how do we do this? We go through educational campaigns. So we have financial institutions conduct awareness campaigns to educate customers about common scams and phishing techniques. We basically have financial institutions send emails, website banners, social media posts. I'm sure you've gotten so many of these texts from, say, M-Pesa or your bank telling you things like they will never ask you for information. That is basically an education campaign. They will never ask you for your PIN, something, and you will only get a call from the bank from a specific number. So the benefits are that it informs customer about the latest threats and how to avoid them. Okay. Then, of course, there are regular security tips, periodic tips to ensure best practices are shared with customers. Okay. They include advice such as not sharing personal information online, recognizing phishing emails, and using strong, unique passwords. Okay. So it keeps security top of mind for customers, reducing the likelihood of falling victims to these scams. Then we have phishing simulation programs. These programs simulate phishing attacks to test and educate users. I don't know if any one of you has ever been part of this simulation. So they send fake emails to customers or employees to see how they will respond and provide feedback. So it helps users recognize attempts in a controlled environment, okay, and learn how to respond appropriately. So 2FA alerts or multi-factor authentication alerts send notification when a 2FA is used to log in into account, okay? So usually we get alerts on SMS, mostly on SMS or email, whenever a login attempt is made, prompting a verification. So you'll get emails like you logged in from a different device. Kindly confirm if it's you. If it's not, if it's you, ignore. If it's not you, click on whatever link or something like that. And then we have the very basic reporting mechanisms, okay? So financial institutions have put in place easy to use mechanisms for reporting suspicious activities. You have an online phone that is available for you, an email that is available for you, so that customers can report potential scams or attempts via dedicated email addresses, hotline, or app feature. Okay, even from your app, you can just make a report on a scam that you suspect. So it enables quick action by the bank to investigate and mitigate threats. So financial institutions are leveraging on all this advanced technology and proactive measures to basically secure online banking platform. So by employing things like multi-factor authentication, encryption, fraud detection system, secure mobile apps, banks and other financial institutions now protect us and our data and transactions from outside infringement. Additionally, educational campaigns and all these reporting mechanisms empower us to recognize and avoid scams and phishing attempts that fosters a safer online banking environment. Through these comprehensive strategies, so both banks, financial institutions, and us as customers can work together to mitigate the risk to ensure the security of online financial activities. Next slide. Okay, yeah, that's it from me. Thank you very much, listeners. I do not have poll questions for now, but you can ask any questions through chat. I'll welcome the very able Albertini Francis for the next presentation. Thank you.
Thank you, David, for that. And thank you for the depth that you went when it comes to explaining digital financial technologies. For my section, I'll be taking you through API security. Go back one slide, Ken. I'll be taking you through API security and the role that it plays in your digital financial resilience. If you've been in the tech space recently, I'm sure you've noticed that there's been a push or a proliferation of an API-first strategy when it comes to your architectures. As together with that, this is fueled by the need by most companies to digitally transform to get their services as close to their consumers as possible. If recently you've noticed that there's more web apps, there are more mobile apps, there's more USDD. When it comes to financial services, I'm sure right now, if you have a specific bank, they have an app for that. If you want, as David alluded to earlier, there's micro lending services that cater for the different segments of the consumer market. The major ones being Tala and many more. Together with this, when you say there's a proliferation of APIs, from that aspect, API security also is becoming a major issue since APIs are becoming a more potent attack surface for attackers. You've seen APT groups even down to even the good guys that is security researchers looking into APIs and how they could be exploited for gain. or for basically to be able to improve the security. Next slide. So in terms of recent breaches, I'll be highlighting 4 of them. The first one being T-Mobile, which is a major telco and is widely known EV support. I think it's Bayern Munich, the assured sponsor for them. So in the case of Bayern Munich, they suffered a data loss of up to 37 million customer records through an attack vector called Ebola. I'll explain that much later. But in this case, it was an issue with the authorization flow where an attacker or anybody basically could be able to access PII or receipts belonging to different customers. That is, if I'm logged into my account or rather to my portal, I can be able to access, let's say in this case, David and Wamaida. I can be able to access Wamaida's receipts. I can be able to access David's receipt because they didn't configure the authorization in a proper manner. I'll explain what Bola is later. The next one, most of us right now are in that phase of our lives where we're trying to expand our horizons, and that may take the shape of learning a new language. If that's chosen poison, I'm sure even Lisa rather signed up for an application called Duolingo. If you've ever missed a day or if you've ever missed a practice session, you've been subject to one of the most, in my opinion, passive-aggressive reminders ever. But to actually love Duo, it's actually a very good application. So in that case, similar to T-Mobile, it was an authorization flow attack where if you provided an email to the email endpoint, you could be able to gain PI data belonging to certain customers. So if it is your email, you could key it in, get your data. If you provided the email of a different user, you could also gain the PI data. This actually led to a big data scraping attack, which yielded 2.6 million users' data. And the most egregious in my case, or rather in my opinion, was Spoutable. So Spoutable is a Twitter or rather X clone. I hate that name. So Spoutable came about rather gain prominence during the time where people wanted to move from Twitter after the Elon Musk purchase due to political leaning or ideological differences. So since in the InfoSec space, I will tell you most people move to an application called Mastodon. For the rest of the people, there are more clones out there, but in this case, there was one called Spoutable. In the case of Spoutable, it's more or less a Twitter clone down to the basic features, like something like, okay, if you're on Twitter or rather X, you know there's something called X. If there's something called I think rooms or something. So in the case of Spoutable, it's called pods. So you can be able to have more or less a town hall of discuss certain issues that you find you have commonality with other people. In the case of Spoutable, you could, if you went to the user's API endpoint, you could be able to see your own data, your bioinformation, PII data. But from a security standpoint, which we found very concerning, was you could be able to see your password, you could be able to see your two-factor authentication code and your two-factor secret. Which is another thing more egregious than that was that if, let's say, you go to a room or rather in that case, it's called a pod. You know, even when it comes to Twitter, you could be able to, when you are in one of those spaces, you can be able to click on another user's profile, see their name, rather the username and a bit of their bio. But in this case, if you've done any sort of hacking, you know that when you click on your browser, you click the networking tab, you can actually see that the networking transactions that are happening in the background. So in this case, if you clicked on another user's bio, you could essentially see the same as you'd see for yourself. That is their username, a bit of their bio. From a security standpoint, you could also see their password. You could also see their two-factor code. This would lead to an attack we usually refer to as an account takeover. So if let's say if I'm in a room with David and I'm with Omaitha, I could be able to see David's password. I can be able to see David's two-factor authentication code, and I could be able to perform an account takeover. And with that, or rather through the security researcher who researched this, he was able to see that when he tried to do an account takeover, it didn't invalidate the session that the current user had. So if David is logged into the application right now, I can change, or rather I can take over his account, change his password without it invalidating it. So from a security standpoint, you see how this could be an issue. I encourage most of us in this, or rather everyone in this room, to go read about this multiple API breach. Bringing it closer to home, there's a research on Twitter called, or rather identifies as Non-Mike. He was able to document his exploit of a prominent financial, or rather fintech application that's widely adopted. In his case, he was able to gain access to other people's user information, and I think this is one of those ethical people who, because he had access, or rather he had access to the capability to withdraw other people's money, but he chose not to. He just documented it. He got a lot of flack for it from that was from an ethical endpoint, but you see that capability was out there in an application that I'd say everyone in this room actually uses. So try to think of it this way. When you unlock your phone, how on all of those financial applications that you have there, one of them is actually going to get you hacked. Yeah, I'm not trying to be alarming or anything, but that's the case. Okay, next slide. So when talking about security researchers and the community, there's an organization called OWASP that brings together security researchers and may be able to come up with certain research and certain guidelines on how to basically look at certain attacks and give more or less guidelines on how to approach them in your different organizations. So as recent as 2023, they came up with a list of the top 10 issues that usually affect APIs. For the sake of brevity, I'll try to go through a few and explain them as simple as possible. You remember in the case of T-Mobile, there was the issue of Bola. So with Bola, it's essentially I can access other people's data by manipulation of a certain uniquely identifiable variable. In this case, if I know my username number and if it's in numerical order, I can try and change it and gain access to other people's accounts or other their information. Broken authentication. Some certain applications usually have a weak or poorly implemented authentication flow. So in this case, let's say I go to my financial, that is my banking application. Most of them, it's usually key in your PIN or basically give your, or rather key in your fingerprint so that it can be able to authenticate you. But what happens in a case where I go to that banking application, provide any sort of password, and also it allows me in. So you see, the security threat there could be anybody, anywhere can come, take your phone, try to log in, get in, and have all this functionality and basically access to your finances. Skipping popular. Let's go to unrestricted financial resource consumption. This is a major issue when it comes to as a service provider for third parties. Imagine a case where you're providing, let's say something, it's a data house that basically they're using that data to come up with certain models or certain information to see how your users are consuming a certain resource, how your users are making their purchases or something of the sort. But imagine a case where if it's actually access is provided on a metered basis, essentially they're allowed to make like up to 30 within a tiered model. They're allowed to make up to 30 API calls, access to certain branches of data. But if it's poorly configured, anybody can have access, and anybody can have access to all the sort of data and make however many API requests as they want. For the rest, unrestricted access to business access, unrestricted access to sensitive business flows. This is actually a case where in most of the time you come across, or rather most of us know that one friend who usually says that they can get you tickets for free. This is essentially what they're exploiting. Let's say like, let's take the example of the house music scene in Kenya that's blowing up right now. So imagine a case where you want to go to where currently you don't have any money, but you want to go to a concert. It's more usually something like tickets, Hasa and tickets or something of the sort. But imagine a case where they've not fully implemented their payment process. So let's say you go into the application, see the concepts that are available, choose the specific contact you want, choose how many tickets you want. And now when you go to the payment basically the payment part of the transaction, you're able to bypass that. So essentially you have free tickets. Or rather, that's how that one friend of yours accesses the free tickets. For the rest, in proper inventory management, this is a case where, let's say you have a financial app, or rather you're building a financial application, and it has different versions of the API. Since convention V0 or V1, it's usually the most basic one. That's where you started with your application. This is the version that most likely has the most flaws. With V2, it's more or less an improvement. With V3, it's actually the most latest and actually has the most it's usually the most secure. Now imagine a case where for V1 or V2, for version 1 or version 2 of the API, it has not been deprecated, so it's still up. And if this is a security flaw, in let's say version 1 or version 2, if I'm able to make call, if I'm able to, as a security researcher, make calls to that specific version, I can be able to leverage those vulnerabilities. And in this case, going back to the example of our ticketing application, I can have free tickets. And so many more. We can pick up on this much later on after the session. Ken, next one. So in this case, I tried to group them according to the major, rather the underlying issues. So the ones in, I think it's red or burgundy. The broken, basically anything that's broken, that's usually an authentication or an authorization flow issue. The ones in blue, that's more or less a configuration issue. The ones in green, these are also misconfiguration issues, but the others are due to our technological flaw. So at this, we can be able to go deeper in also. Next slide. And with this one right here, it's industry insight kindly provided by Salt, which is a very good API security or other API inventory management and security platform. They did this poll with polling some of the users of the platform to be able to see some of the greater security concerns that they face on a day-to-day basis. Because on one hand, you can sit here and say that, okay, you should be doing A, B, and C, D, and E in your basically environment. But the reality of every day is, and as most of you know right here, is it's never that easy. So in this case, for some of the companies that were pulled when it came to the production API, some of the key issues that it's facing is the largest three are vulnerabilities, authentication problems, and sensitive data exposure. So sensitive data exposure looks like your bank account details leaking, your username, your emails. So this is how some of the time you're able to get messages from services that you didn't sign up for. This is one of the major ways that it's possible. For certain organizations that face rather like banking applications, fintech applications, downtime is never an acceptable thing. So as you see, and I think it's the fifth issue, with the 19% of the respondents saying that it's an issue. Downtime, denial of service is one of the major issues that they're facing. And as recent as the attack conducted by Anonymous Sudan, we saw that one major attack could cripple so many things. For so many people, we couldn't access our banking applications, we couldn't access M-Pesa because of an API issue. So you see the level of importance API carries on a day-to-day basis, both as technological or as technical practitioners and also users of these technologies, which begs the question, are we truly addicted to tech? Anyway, that's an existential question which can be able to handle right now. When it comes to the API programs in these companies, we see that for the fears for some of these companies is that they don't have enough security practices in the pre-prod environment and prod environment, and this usually manifests in certain cases in those API breaches. For some of them, is that they don't address they don't address the security and production security concerns in time. So this, as again, if it's not attended to in time, if there's not enough security measures, which leads to some of these API breaches, which is a sad thing to see. Because from a regulatory point of view, as Umaida alluded to earlier, there's fines. From a reputational point of view, you lose customers. From a trust point of view, you will lose a major number of your customers. And in most cases, we know that when it comes to reputation, it's never an easy journey to be able to repair your reputation. Once trust is lost, most customers will either A, move to a different bank, or B, go to a different fintech application, and that's how you lose your customer base. Okay, next slide. So another major factor that should be looked into is I'm sure earlier in this webinar, you saw a question that was asking basically how do you develop your web apps and rather your applications or APIs, whether it's in-house or it's through a third party. With third parties, is usually, when it comes to the development, it's usually the case where some companies either don't have the technical or financial muscle to do it inside, so they usually outsource it to a different companies, such as in this case, Pathos Technology, which actually does that, and they do a very great job. So if you're in this webinar and have a need, talk to these guys. David will be able to sort you out. But from a security point of view, some of the things you should be looking into is if it's being done by a third party. Do they have, or rather have they provided you with any information, documentation to basically document how they do secure coding in their environment? Do they have any sort of, or in your case, have you provided them with any sort of security and compliance requirements that should be factored in when they're developing this application? This usually takes the shape of something like data storage, data residency, basically where your data be stored, how will the data be accessed, will the communication be encrypted or anything of the sort. So as they're building this application from a technological speaking aspect, all these things are factored in. After the application is built, it actually needs to be tested. And do they have first of all, a testing program? Is it robust enough? And also, how often do they conduct this? After this application or API is built for you, can we bring in, rather, what in my case, or rather in the company's case, is usually a recommendation? It's bringing a different third party. This might look like a pen tester, a consultant, or even a pen testing firm such as ours to be able to test this application as an independent third party, so that we can be able to test that, yes, this application or this API is actually secure. So as you bring it into your environment, as you're integrating it into your data, into your environment and architecture, you're bringing in something that is secure, and it won't later on, or rather down the road, it won't be the vector that is leveraged to break into your environment. So going back to reiterate it, secure coding practices, make sure whether it's done in-house, whether it's through a third party, they have secure coding practices in place. And that is, there should be your security and compliance requirements, and make sure that there's enough testing. And this can be attested to that, yes, this application meets, let's say, some level of quality. Because going on a tangent here, this is the case where when you do some of these tests and we go back to the third party, there's usually the case where they say, this is not a major issue because some of our users don't actually use, in most cases, we use something like Backsuite. You can imagine telling that to somebody, or rather to a security researcher who knows that, this is how I can break your application. This is how I will, let's say, withdraw somebody's money, and this you're providing it to the internet, to the unknown. The security researchers, or rather even threat actors, were sitting just waiting for that one broken application. And there's a recent study conducted on applications to see how fast an application can be broken. And as of the recent poll that was done, or rather that I know of, it was under 8 minutes. That's how long it takes for an application to be broken and for data to be pilfered. That is in the cloud, in the case of a cloud deployment. So 8 minutes. make sure that in the back of your mind, that's usually what you're fighting with. You deploy it, that's how fast it gets hit. Going to an integrations point of view, we're looking at it from a configuration perspective. Are we sure that when you're bringing in these APIs, first of all, are we doing the proper configuration so that it's not a simple issue such as what can we say, like that we missed out on a specific checkbox that we didn't tick, or it wasn't an environmental variable that we didn't put in mind. So this is how we essentially get hacked. And in the case of integrating with a different with a different third party, when there's usually the case of third party compromise or a third party compromise, of the case of what do you call it, supply chain compromise. This is where, let's take three companies: company A, company B, company C. Or let's take the first two. So for company A, in my case, as a hacker, I'm trying to compromise company B. But from the recon that I've done, I know company B, the cybersecurity game is on top. So they have top tier engineers. They have the proper security processes in place. They have the right tools in place. And so from, let's say, let's say as a hacker, in my mindset, I'm usually trying to go in through the least resistant way, so that I know trying to hack company B from our infrastructure point of view, that won't be easy. But from insight that I have, I know that we're integrating with company A. In the case of company A, they're really lax with their security, so that provides me with a vector. So all I need to do is hack company A, leverage whatever vulnerabilities they have, and since I know company B maybe it's some data or integrates in one form or another through to company A, that's essentially how I get in. That's essentially how some of these supply chain attacks happen. Hack one company to get into the next company. So when you're thinking of integration, this should be something that you're thinking about. From a consumption point of view, this is essentially how do we make sure that we're not running losses, or we're not basically providing free services to other companies who should be paying for this. If in our case, we're integrating, let's say, CYBER1 solutions with let's do different companies. A data provider and a certain company that consumes this data to come up with models. So if they're integrating with each other, there should be some level of if they have an SLA, they know that I'm supposed to consume this data, I'm supposed to make this amount of calls. If it was poorly configured, one of those companies could be able to consume as much resources as they want without any sort of restrictions. So this may lead to a loss in the case of none of the other companies. So you see, from a financial point of view, this doesn't make any sort of sense. So all of these three should be figured when you're trying to integrate with a third-party partner, whether it's from a developmental point of view, from an integration, from a consumption point of view. Ken, next slide. So when it comes to API security and how you're thinking of it from a resilience point of view, so below are some of the things you should be able to think about, or should form some of the perspectives you hold. So for one, your asset management, you can't protect that which you don't see. That's a very fairly famous saying, or rather quote in the security space. So in this case, how am I handling my asset inventory? Do I know how many APIs that I have? Do I know who I'm connected to? Do I have any sort of monitoring in place so that I know? In this case, I have, let's say, 20 APIs. On these APIs, maybe I have like 5 different endpoints on each. And do I have any sort of security monitoring to know what's going on in this? So from an asset management point of view, I have that in check. I know who's connected to me. I know where I'm connected to. I know which endpoint is live. And I know I can be able to, with a certain level of, a certain degree of certainty, I know where my data is going and what it's doing. From a vulnerability management point of view, do you have a security standard on top of the industry regulation on which you should be basically what you are on top of industry regulation, which shows you, okay, these are some of the security practices you have internally as a company. Do you have any sort of security standard that's custom? You could be building on top of industry regulation and some of the things as a security researcher, security analyst. Your compliance teams come up with some certain requirements, and all of this together can be used to create your own custom security standard. And can this be translated into our technical architectures, so that at any one time we know this is what it's supposed to be looking like, this is what our security is supposed to be like. And on top of that, are we doing security testing on a continuous basis? This could take the shape of dynamic testing of our application. This could be a vulnerability assessment and penetration test. This could be a red team to be able to basically mimic a threat actor and see if somebody was to attack our application, what will they have access to? What are some of the security gaps we have in place? And how do we fix those? And can we come up with maybe a sort of roadmap to know that, okay, we have these vulnerabilities. This is the low-hanging fruit. This is what we can fix now, and this is what we can do from an architecture point of view. Do we need to upgrade certain things? Do we need to deprecate certain things? Do we need maybe to approach a different type of technology that is maybe, if you're having an issue with your GraphQL technology when it comes to API, maybe move back to REST or something of the sort. So all of this will form the perspectives. And as you're having some of these technical meetings, you'll know, maybe we need to do this. This is how much resources we will need to have. This is how much technical resources we need to bring into the company. And essentially see how this factors into strategy. The next one is collaboration. As I said earlier on, bring in your compliance team, bring in your development team, and most importantly, bring in your security team, so that you can basically leverage the different perspectives from these different teams and be able to come up with something that is custom and unique to your company, and that is actually something that you can actually implement in your systems and come up with a very secure security standard. The next is regulatory compliance. Make sure that you fully understand what your industry requires of you. As Omaida alluded to earlier, and she's the expert in this, she will tell you that in certain industry, there are certain key things that you should be looking into and making sure that you're compliant with. So do you have a GFC resource within the company, or rather are you using the, are you using the resource, or rather have you contacted a GSC consultant to tell you, or rather paint the picture of for you of how your compliance strategy should look like, or how your compliance cadence should look like. The next one is when it comes to incident response, as David and Maida said, what I'm bringing to the table is understand your cyber risk that is in your context and build around it. So in this case, understand first of all, okay, let's try to make it as graphic as possible. You're a small company. So in your case, maybe you don't need those high budget toolings, such as maybe an enterprise tool or something of the sort. Understand, maybe this is our company. We serve X number of customers. We provide X number of services, and these services maybe consume this type of data. So in terms of our security strategy, these are some of the things we should put in place. This will also help you from a resource management point of view to understand that I need to provide data to this I need to provide resources to this team. I need to buy this sort of security equipment. I need to have this type of analyst, anything of this sort using. The next one is create a detailed incident response plan. As the saying usually goes, hope for the best, but prepare for the worst. Understand that your system, or rather your technology that you're running, is never 100% secure. And it's usually said that aiming for 100% security is a fool's errand. Understand that you'll have to get it as secure as possible. With the perspective of getting it as secure as possible, this looks like, okay, how, in terms of my technology, how can I basically make sure that it's up to date as possible? In terms of maybe my personnel, have I conducted any sort of training to make sure that they are knowledgeable on some of the security issues, or the security maybe violations, or in this case, some of the security practices that they should be knowing of, and that will help them navigate some of the things that they're doing. And with all of this, it should be also be brought in, or rather bringing it back to incident response, is that am I making sure that my application, or rather my incident response strategy is specific to my company. So if it's a fintech, I need to be making sure that it's prepared for that. If it's a banking application, how do you make sure that we always have uptime? Do we need to make sure that maybe we have a different site it's up and running? Do we need to scale in terms of times when there is increased traffic of the sort? So essentially, once you understand who you are and what you're doing, and what you can be able to, once you understand who you are and what your business model looks like, you can be able to create it specific to that, rather in that case. Next slide. So bringing it all together. So bringing all of this together, we usually find the need for a security roadmap, or rather a strategy. Having an API-specific strategy will help in terms of, first of all, from a regulatory point of view, you can be able to show that we're actually building up something. From a resource management point of view, you can be able to know that, okay, at this point in time, this is my size, this is what I do. It's the hope of any business to keep on scaling and growing. So I will need to maybe to increase the number of tooling that I have, increase my personnel, increase the level of training, increase the level of skill in my team. So from a resource roadmap point of view, you'll be able to know that at a specific standpoint, I need maybe to go open source when it comes to my security tooling. Once I reach a certain threshold, is now when I can start thinking of something that's enterprise tooling. In the start, which is usually recommended, is invest in highly skilled analysts or developers or security personnel. So as you grow, you can be able to scale as such. You need to integrate operational and security practices to make sure that you have a secure and healthy baseline. So anything that's out of the ordinary, you'll be able to notice through your monitoring and basically through your monitoring technologies that you have in place. Understand your industry compliance standard and integrate it into your technical architecture, and ensure that you are adopting it on a continuous basis. And make sure, rather than one of us, I said it before, when it comes to API strategy, it helps you, first of all, understand the resource and the resource expenditure and do it in an efficient manner, and also get the correct type of buy-in from the key stakeholders. That is, if you're going to have that money conversation with the top managers of that board, if we show them a sort of if they show them a sort of a roadmap, they'll be able to understand that actually this is a cost that was actually planned for, this is a process that was planned for. So what am I essentially doing is actually help build my security of my organization. And lastly, as I said before, make sure that you actually have a robust incident response plan in place so that you can be able to basically bounce back or make sure that you're resilient when it comes to the time when you're being attacked by a third threat actor. And all of that is to bring it together to make sure that your API strategy is done in a safe and secure manner. And I guess that's been my time. Okay, next slide. Thank you. And if you have any questions, post them in the chat. There were poll questions. If you've had, you can take this time to actually answer them. Thank you, and back to Omega.
Thank you, Albertini. Thank you, David, for that insightful engagement. Thank you for letting us for simplifying the API security environment, and also how to secure yourself doing online banking, and also for the data privacy segment. Everyone, if you have any questions, if you have any clarification, it's a good time to remind you that you can type them in the chat or raise your hand virtually. So I'll give a minute for that before we continue.
Also, I think, Mohammed, if they have any sort of follow-up on some of the issues that we've provided, or rather the team will be able to provide a way for them to do any sort of follow-up with us.
Yes, that will be handled, Albertini. Thank you for that. So we have only 2 minutes to spare until this end of the webinar. And now, as I see no questions, I believe now that you are equipped with all this knowledge on digital financial resilience, we encourage you to actionize all that you have learned today to just build a more secure environment for all your institutions. And we are here to support you. If you have any further questions or you need any clarifications in the thematic areas of data protection, online banking, and API security, or need any assistance with them, please do not hesitate to reach out to us. And we thank you all for joining us. Have a great day.